Banks have a secret loan menu. Ever feel like banks are serving you the stale leftovers of business loans while the real gourmet stuff stays hidden? It's like visiting a restaurant where the tastiest dishes never make the menu, reserved for those who know exactly what to request. Welcome to the real world of commercial lending, where high-interest, fee-packed loans are front and center, and superior options are kept under wraps. Picture this: your business is ready to grow. You've got big plans, maybe new hires, better gear, or more space. But every bank offer feels like a trap. Sky-high rates, endless paperwork, and terms that just don't work for you. What if there were smarter, easier loan options that could make your big plans turn into reality? Curious to know? You should be. Let's unlock the 3 off-menu business loans banks hope you never find out about. While your bank might make it sound like their business loans are the only game in town, the real star of the show is often the SBA Micro Loan, a government-backed gem for small businesses and the affordable ladder for them to grow. These loans, typically capped at around $50,000, are designed for small business owners and entrepreneurs who need a financial boost without the life-taking interest rates that mainstream institutions love to dish out. SBA data shows that over 4,200 microloans were issued in a recent year, totaling nearly $72 million, proving that many companies are quietly taking advantage of this lesser-known option. Unlike traditional loans that feel like jumping through flaming hoops, endless paperwork, perfect credit, and your entire financial life story, the SBA Microloan is more like a steady bridge across a river, solid, supportive, and built to actually get you to the other side. Sure, you'll need a solid business plan and some financial basics in place, but you don't need to be a corporate giant to qualify. Think of it like this: big bank loans are like trying out for a cutthroat reality show, while an SBA microloan feels more like joining a mentorship program that wants to see you win. Interest rates usually fall between 8% and 13%. It is not dirt cheap, but way better than most quick cash or credit-based loans. Plus, you get up to 6 years to pay it back. That means smaller, manageable payments and more room to actually use the money to grow. Like upgrading your tech, stocking up on inventory, or finally launching that big marketing push. Sounds doable, right? The biggest eye-opener? The SBA Microloan isn't even a bank product, so it doesn't maximize their profits. No wonder they'd prefer to keep this off-menu special a secret. When you know it exists, you can cut through the noise and secure a financing solution that's designed to support your business rather than simply fatten the sharks' wallets and harm the small fish. The next business loan program will make your life a whole lot easier. But you know what'll make it even easier? Hitting that subscribe button. We've got a bunch of game-changing tips and insider secrets dropping soon. Don't miss out. Imagine a loan that grows and shrinks with your monthly sales. Pay more when business is booming and less when it slows down. That's the beauty of revenue-based financing. Instead of fixed payments that ignore your cash flow, revenue-based financing takes a small percentage of your revenue. No pressure, no panic during off months. If you've ever been stressed about making loan payments during a dry spell, this kind of flexibility could be a total game changer. Here's how it works. A lender looks at your current revenue and growth potential, and then gives you a lump sum up front. In return, you agree to repay a small percentage of your future sales. So if business is booming, you pay more. If it slows down, you pay less. To understand it better, let's say you run a bakery. During the holidays, your sales shoot up and so does your repayment. But come January, when things naturally slow down, your payments drop too. No fixed number to stress over. This breathing room helps you manage cash flow and restock slowly, and prep for the next busy season without the panic. The beauty of revenue-based financing is that some lenders even fund you within 24 to 72 hours. A 2021 study showed that 35% of small businesses picked revenue-based financing for one key reason: fast access to cash when it matters most. Unlike equity financing, you're not giving up control with revenue-based funding. No investors calling the shots or questioning your vision. Even better, most RBF lenders don't care about perfect credit or tons of collateral. They focus on how your business is doing, not your past mistakes. So if the bank said no, this might be your yes. Of course, not every revenue-based deal is perfect. And not every scheme is full of pros. Some lenders might sneak in extra fees or take a big chunk of your sales, making it harder to breathe. But if your business has busy and slow seasons, or you just need fast, flexible cash, it can be a total lifesaver. Think of it like having a funding partner who grows with you, instead of a bank that wants the same payment no matter what. Wondering if this might be the better fit for you? It just might be. Maybe you're ready to scale, add a new production line, upgrade to better software, or buy that one machine that could seriously speed things up. But let's be real, equipment like that doesn't come cheap. Some setups can cost anywhere from $20,000 to $50,000, or even more. Paying that up front could drain your cash flow or force you to give up a piece of your business to investors. This is exactly why many small businesses get stuck and struggle to grow. That's where equipment financing comes in. A smart way to get what you need now and pay it off gradually as your business expands. Here's the cool part. The equipment itself usually acts as collateral. So unlike traditional loans where your house or personal savings might be on the line, here your assets stay protected. According to the Equipment Leasing and Finance Association, nearly 8 out of 10 businesses in the U.S. use some form of equipment financing or leasing. That's because it helps them avoid massive upfront costs while still staying competitive with the latest tools and tech. Here's a real-world example. A local packaging company needed a new automated sealing machine to keep up with demand. The cost? Around $60,000. With equipment financing, they were able to get the machine right away and spread the payments over 4 years. In just 6 months, the new machine boosted their output by 40%, more than covering the monthly payments. And there's a bonus: tax benefits. In many cases, the interest on equipment loans can be tax deductible. That means you could save a decent chunk come tax season, which adds up fast, especially for growing businesses. If you're worried about getting approved, don't be. Lenders who specialize in equipment financing usually look at the value of the equipment itself, not just your credit score or lengthy financial history. It's often a much quicker and simpler process compared to traditional loans. So whether you need a fleet of delivery vans, a commercial oven, or the latest design software, equipment financing could be your ticket to scaling up, without putting your business or personal finances on the line. These are the 3 off-menu loan programs that banks aren't exactly racing to promote. Whether it's the friendly terms of an SBA Microloan, the flexible safety net of revenue-based financing, or the targeted power of equipment financing. Each option offers real potential for business owners who'd rather not be at the mercy of high fees and rigid repayment schedules. Ready for a challenge to keep things fun? Name another unconventional financing option you've heard of that can supercharge a business. Drop your thoughts in the comments below. And if you're hungry for more insider tips, don't forget to hit that like and subscribe button. Stay tuned. We've got plenty in store for your success.